Hey, welcome back to Everything Money. We are back with Jimmy from Learn to Invest. Welcome, Jimmy. Good to see you.
Hi, I'm Jimmy.
Paul is here. Mo is here. Today, we're talking about Jimmy and Paul and Mo's portfolios. We're going to highlight some differences in them, why they made some of these decisions, the percentages they took, and probably have an open discussion about why they're passionate about these companies, some of which, Paul, we don't agree with Jimmy on, and vice versa. And so let's get into it. Jimmy, let's talk about, we mentioned, we've done some videos on your portfolio. What are some, I wanted to bring up some that, Paul, you definitely don't own. Things like Lockheed Martin, Activision, and Google. Talk about those three, Jimmy, first, and give us your thoughts on why you own those three sectors.
So Lockheed Martin is one I bought a while back. And frankly, one of the biggest reasons I wanted to buy Lockheed was that the stock market was moving higher. It looked fairly undervalued. And it's in the event that the stock market tumbles, that stock will do well. Their revenue is not really tied to the U.S. consumer. It's tied to the U.S. government. So it was a way to sort of add some safety to if the market has a pullback. In fact, this year to date, that stock's like up 35% or something for me. So it's been my best performer that has kept my portfolio in the green.
When did you grab it? I mean,
it was probably 8 or 9 months ago.
Oh, so the recent spike with the war, Paul, I mean, this has helped Lockheed for sure, right?
Well, I don't know if Ukraine or Russia is buying, but Biden's new budget proposal, the Democrat budget proposal for a smaller U.S. military actually was an increase of 4%, $31 billion.
Okay.
So another example of how Democrats and Republicans are no different. But that would help a company like Lockheed Martin because the government's going to sit there and as long as they're not cutting spending, which I don't remember the last time that happened, but as long as they're not cutting spending, they're going to keep spending money on military. My personal opinion is I tend to avoid those companies. I just don't like buying companies that are tied to the U.S. government. I don't know why. I think it's maybe I don't know what the reason is, but I just have not done it. And I'm not saying it's a bad investment by any means, but I think I looked at the profit and it was very up and down. Is that correct, or am I thinking that
Sure,
correctly?
yeah. It's not as stable as you would think when you think of government contract. There is some volatility to the profit. If I remember correctly, a bit less volatility to their revenue.
It's funny, Paul. Yeah, some people are on the opposite stance of you. They actually like these companies that work with the government because
I actually think I'm wrong then, Seth. Look at this. I mean, 6.3, 6.8, 6.2, 5, 2 billion. And I'm sure there's some sort of write down here. 5, 3.6, 3. I mean, it's actually pretty consistent here.
Nice, consistent growth.
Yeah. So for me, I think that the biggest thing for any portfolio is, and I know we're going to get into some of your positions, but the reason I wanted Lockheed was specifically for if the market pulls back, what's going to do well. The Russia situation that specifically helps a company that makes missiles. But even if it was just a general recession, Lockheed wouldn't get as hurt. There are defensive industries. That is a defensive industry. I don't mean defensive like military. I mean defensive like portfolio defensive, sort of like a pharmaceutical company. So when I was afraid that the market was overvalued as I was starting to expand my portfolio. And I said, you know what? Before anything happens, I want to jump in and buy it. Because if you're going to protect your portfolio, if you're going to make a call about something, you really have to do it beforehand. And I find many investors, jump in and buy it when the war starts. Well, at that point, it's overvalued. Like the thing takes off and runs. I'm up 30% from it. But if you waited for that to happen, then it's too late.
Mo, what do you think of Jimmy's take on Lockheed?
Yeah, I kind of look at the stuff that I'm not involved with things that get government contracts. I kind of look at it as when you have a business that sells one specific item and that's what they generate everything off of. It kind of worries me. Now, I'm not saying that's a bad thing. I mean, the government's pretty reliable, so they're going to keep spending. So it's not the worst thing in the world, but that Russia-Ukraine situation definitely helped. I mean, they went up $100 a share within a matter of
Is that what happened?
Yeah, they went from
that's right. You had them in the Employee Trader series,
yeah.
And it was up 12% in like 2 months.
Oh, it was incredible. I mean, look at it. No, I mean, in 2 months, yeah, it had this run, but look at this spike that it had. I mean, that was $100 in a matter of 6 trading days.
Do you have my entry price? What was the entry price? Where's this thing trading?
Yeah, let's see. So it says here your entry price was $336.
That sounds about right.
And you're at the 444 now.
445, boy.
So, but that was the I'm less concerned about the government just because. Let's call a spade a spade. What are the odds the U.S. government stops spending on military? When does that happen?
I wish that would happen.
Yeah, when will it actually happen?
And, and especially a company like Lockheed. I mean, that's one of the
there's only a couple. There's Lockheed, there's
Lockheed, Northrop Grumman, and
General
Raytheon,
Dynamics.
maybe.
Oh yeah, General Dynamics.
General Dynamics, yeah.
But that's it. There's only a few companies that supply the government, and it's not just the U.S. government. I mean, sure, the U.S. government is the majority of the revenue, but they supply a lot of the world.
What was the name of the company in War Dogs? I remember the movie War Dogs.
Oh, great movie.
Fabulous movie,
Phenomenal.
but either way. Yeah, I mean, listen, it's a lot more stable than I thought, and I'm not fully opposed to it. Let's see how their cash flow looks here from our software. Yeah, I mean, the cash flow is actually pretty consistent. The big drop right here.
Probably would have been that same
right
write-off.
here. Well, I don't know if the write-off would affect, because the write-off would be a non-cash expense. Changes in working capital was the big thing right here. A big drop in their cash from operations from changes in working capital.
Yeah.
All right, so, and the same thing here. If you see that, when they had a big drop in their free cash flow. All right, so, I mean, listen, I'm not going to knock it. I think they have pretty good, let's see their balance sheet. Cash and cash equivalents, $20 billion. So yeah, they have plenty of cash to pay off. So it seems like a stable company. Yeah. Let's see their 5-year PE. Oh, 19 and 5. Let's just go to their 8 pillars. Oh yeah, look at that.
And right now it's overvalued back at 3, whatever. That's why I think the key to building, if somebody's building a portfolio, I personally think the key is it's to try to look out in the future, or even look at your portfolio and say, where am I weak? If you have 10 tech stocks and you think, oh, what if a tech stock, what if the tech bubble, not bubble, but what if the NASDAQ starts turning lower? We should probably either offset that with a buy that won't get hurt, or do something to protect that, because
actually, I'm kind of annoyed I missed this, because this is after a 30% run up.
Yeah.
So, oh well, that's on me.
We were doing videos. I wonder what we were thinking back then.
No, it went back. I remember in the video, it was tied to the government. That was the big deterrent when we were looking at it, because there was a lot of people in our community that were talking about it. And yes, it was probably a value play, but it was so tied to government that we shied away.
Okay. One of the things that I had talked about in our community was actually that exact thing, but it was sort of the other side of it. I was watching consumer confidence drop, and I was saying, it might be smart to find something that's not tied to the U.S. consumer. Most of the U.S. economy is tied to the U.S. consumer.
You know what percentage?
What?
You know what percentage is consumer spending of the GDP?
Oh, I would guess up in 80, 70 in that area.
70.
Yeah.
Well, last time I checked, it was 70. That was
that makes sense. Yeah, the U.S. consumer drives everything. But if I want to if that starts to weaken, what if the next recession is tied to the U.S. consumer pulling back? Well, if that's the case, Lockheed Martin.
Paul, we get a lot of questions about your gold position, yours and Moses' gold position. Jimmy, you're obviously not in any of that. Paul, tell the folks, especially people who are watching from the Learn to Invest community, why you're in gold and what you think is going to happen.
Gold is a hedge against U.S. stocks. I mean, that's just the reality. And with inflation coming, gold can be there. Now, do I invest directly in gold? I do not. When I invested in GDX and GDXJ, these are 2 ETFs that involve gold miners. And this is a play from a good friend of mine named Michael Moskal. He started putting me on gold 3 or 4 years ago. And the play is these miners are being valued like gold's at $1,000 an ounce. And gold's at $1,900, $2,000 an ounce. And I look at that saying, at some point, commodities will come around when people people are negative on commodities right now. At some point, people will shift because they're not going to get the returns they're getting from stocks, whether the stocks are falling 20 or 30%, and they see gold go up. And I just think it's a long-term play that there's a disconnect between value and price with the gold miners. I'm not making a play specific. I don't own gold specifically. I own the companies that mine the gold and refine it, whatever the term is. And that's my play.
Jimmy, what do you think about that? Do you get questions from your community about gold all the time?
Yeah, I think, gold it's a hedge on inflation. Gold itself should do quite well. Buffett, I know Buffett's against it because it doesn't generate anything.
That's why, by the way, I agree. Whenever people tell me about commodity, I go, listen, I need to have something that generates me income. That's what I understand. And that's why I bought GDX and GDXJ, because it's the miners that generate cash flow in that portfolio.
Well, I actually think that's interesting, because normally if somebody asks me about miners, I would hedge on it. I'd say, okay, yeah, but you're not really making a gold play now. You're making an operational play. It's possible. But to buy the ETF, where you said, what's interesting to me is that when you say, hey, these miners are trading as if gold's $1,000. Well, you're not just buying gold, you're buying gold at a value.
That's the point.
Which is,
and that's my play on it. It's assuming so far it's done well, but I don't look at the confirmation bias and recency bias. I just look at it and say, okay, well, I do think gold will be a lot higher in the next 4 or 5 years, especially if stocks do what I think they're going to do and inflation's high.
Actually, I think now I just thought of it. It's probably, if you're shorting the market, it actually makes sense because you're making money on the way down, and what's going to happen? It's going to be a hedge against the market. Gold's going to go up.
Yeah,
so
let's write that down. Maybe I should look at more GDX and GDXJ, but it went up a lot, and I sell covered calls on it. That's the great benefit of having the ETF. It doesn't make a ton of money, but I can sell some puts on it and buy it as it goes lower. But that is not my biggest position. My biggest position from any investment is a short on QQQ. I shorted NASDAQ 100.
And we did a video about Google with the two of you, but I want to reiterate the concept of Jimmy wanted to get into the growth sector, quote unquote growth sector. He's falling in love with Google, especially pre-split. And Paul, you were against this, but you're shorting. So let's talk about these between the two of you guys.
So I look at QQQ. I look at the NASDAQ 100, and I see the names in there, and I go down the list, I go overpriced. And then not just, maybe I just think astronomical. I mean, I just looked on the list going, I see these names all double, even sometimes triple, quadruple where they should be. And I'm like, yeah. So I used to have an S&P short. And last year around October, November, I said to Mo, my brother, I'm like, God, I wish I had the QQQ short instead of the S&P because the QQQ is way more overpriced. Well, come beginning of January, I thought to myself, you know what? Why don't I do some tax loss harvest? I'll get out of my SPY short, which had a huge loss. I'll enter, and it gives me an excuse to enter. And then what I did was I sold all my stocks because they all had huge long-term gains, and I just rebought them back. Yeah. So I sold my SPY. I exited my SPY short, had a big long-term loss, sold all the stocks that I had with long-term gains, all the ones that had long-term gains. So all the long-term ones had gains, but I couldn't sell the short-term ones because it wouldn't have affected it. So I got some benefit there.
Tax benefit there.
Yep. And now I'm hoping, we have a lot of real estate, and I'm hoping that if we sell a property at some point or something, that it can write off that SPY, but I did a tax loss harvest by entering the QQQ. Yep. And the QQQ was down at 1.20% when SPY was down like 11 or 12%.
Yeah.
So it was looking great. The other thing is, the QQQ dividend yield is only 0.4% versus the SPY was 1.2. So I saved there.
And the option, the
options were great.
Is so much more volatile than SPY that the options premium is just so much more.
I was making at one point 20 to 30,000 a week just on options income selling covered puts on my QQQ position.
Yep.
So,
and those were not very aggressive puts either.
No, they weren't. Yeah. So I look at this saying, okay, I believe that the NASDAQ will fall much more than the S&P. Sure. I absolutely believe that. So I now have the opportunity to be in that play as opposed to the SPY. And I've shorted a quarter of our portfolios is in the NASDAQ short.
Jimmy, what do you think of that stance?
I mean, I think that was well timed. January was the perfect time.
January 5th. Go look it up. I literally was like, oh my God, did I just get super lucky? Because when the COVID crash happened, I exited my SPY short literally at 21.90, and I think it went to 22.80. It went to 21.90, and I was just like, and then it just shot up from there. I'm like, oh my God, I literally got it within and everybody else on the internet would be like, look how smart I am. I was just like, oh my God, was I just the luckiest son of a bitch of all time?
It was funny because he was in his office and he just randomly got up, saw the market, got up, went to his brother's office. He's like, I think we should exit this short.
And the reason we exited the short back in COVID was like, it just kept going down. Like, you usually have a bounce back up, get like a little happy bounce. Yeah. And it was like 7-8 days in a row. And I'm like, listen, we got to have a bounce at some point. We'd made like a few $1 million in a matter of like literally 3 weeks. I was like, okay, listen, let's just get these gains in and then let the bounce happen. And it literally shot straight back up. So for the QQQ, it was January 5th. I said, let's just exit and I think if you look at it, like December 28th was like the high of the NASDAQ. I mean, it was absolutely like, finally the gods. I told Mikey and Mo, I'm like, I was owed this after years of I was owed something like this. So it happened, and I still have now the QQQ is back up, and
it's up 20% in just the last 2 weeks, Paul?
Yeah, so I've given almost all those gains back. And
I look at it as, it does suck overall, but again, those options are so good, and we saw how quickly it came back up. It's going to come back down as quickly, and he'll just be able to.
So I think we're getting that. Oh, this was a joke. Like, it's fine. Stocks are great. The bear market's over, as our good friend Jim Cramer said. We'll be fine. I think this is if you go look back at 2000 and the NASDAQ, this is what it did. March 10th was here. Boom, boom. And then just like that's what happens. You have to get people going, oh my God, oh wait, it went back up. Oh my God, oh wait, back up. Oh, this is fine. And then, so I think we're starting to get into this whole.
And also, I did this on the morning show. These are your last 11 days starting here. Look how low the volume is on the S&P. I mean, you've touched average volume one day. To me, there's just more buying volume than selling volume out there. This is a erratic run, and it's going to stop. At some point,
look at how many positive days we have there.
11 straight days. Well, 10
one
out
day
of
in the
11
middle.
days.
Yeah, it's like, come on, this is
10 out of 11 days with low volume.
This is not a strong rally in my. And again, I'm not in this I'm not in this. I'm in this for the long term. Like I look at when you said to me off air, he said, "Wait, you're like straight up shorting." I said, "Yeah." He's like, "No puts." I'm like, "No." He's like, "Oh, that's ballsy." I'm like, I look at no different as buying an ETF for long term. I look at this going like, listen, I dollar cost average into this short. And I have a big position on it, but I look at it going like, if I really believe what I believe about valuations, and we're so nosebleed high, you look at the chart of valuations in history, like from 1900, it's like Great Depression. No, it's like Great Depression, all this stuff, 2000, and then now. And I look at this going, okay, this is the average. Is it possible this goes to here? Sure, it's possible. But I look at this going, in the next 5 years, something will happen. And I'm selling enough puts where my dividend and interest costs are more than covered. I put more money in my pocket. So the short isn't costing me any money. A put would cost me money.
Yep.
Right? And now I have a position in the S&P on the QQQ short that doesn't cost me $1.
Yeah, that's one of my hesitations with shorting is you got to pay the interest on it, got to cover the dividends.
On QQQ, it's nothing.
Yeah, and that makes sense. And it makes sense to switch over to QQQ.
Even SPY, the money was nothing. But the dividend is like, the dividend's literally a couple $1,000s a week for me. Not even. It's like $1,000 a week for me.
Yeah, and for me, my hesitation personally with shorting is not I don't think it's a good move. It's I emotionally can't deal with it.
And that's great that you say that. And for individual names, guys, first of all, any shorting, don't do it. But for individual names, I'm kind of against that now. But for markets and ETFs, I have no problem with that. Because to me, I just look at it as going, I'm dollar cost averaging. A short is no different than going long in something. It's just inverse. Now, everybody goes, but there's unlimited downside risk. Yeah, I get that. I do understand that. But the NASDAQ's not going to 1 million. You know what I mean? Yeah. Like, I'm not getting buried by this thing. Do I have a big loss? And guess what also? My biggest loss on the S&P short was still on my entire net worth, 6%, not even 5%. Yeah. It's like, and that was when I literally, it was like awful. I was just like, what the hell is going on here? So I'm not worried about that. I can afford that. And just like, if it does what I think it's going to do, it's only going to make me 4 or 5% of my money. But it's still a nice thing to make money. This year, at one point, I was up 4% when the market was down 20%. Nobody cared about that, did they?
Before we wrap, I want to get your final quick thoughts. Neither of you have Shiba Inu in your portfolio. Reasons?
I couldn't spell it correctly, so I typed it into my trade. I just didn't,
Jimmy, your
didn't
thoughts?
go through.
I never heard of it.
And
my biggest holding.
I recently
you know what it
heard
is? No. It's a crypto.
Oh, is it?
Yeah.
Oh, well, that's why.
Oh, wow, that's awesome, Jimmy.
Yeah, no, I've never heard of it. Yeah, never.
Yeah, it's a crypto.
I ignore the crypto market.
I've also heard from a very wise guru that if you're not buying Tesla at 1,000, you have no idea what investing is. Your final thoughts on that play?
That wise guru is going to be very broke very soon, and I can't wait.
I'm waiting for it to get to 30,000 before I buy. I want it to be higher and more expensive.
It'll be bigger than the world economy at that point.
Yeah, exactly. That's what I need.
Well, they're calling for that number, so we're almost home. That's our take on the portfolio. Thank you, Jimmy, for your update. I love the banter. And more videos with Jimmy, check around, click our channels, check Learn from Invest, subscribe to him below, and we will keep these discussions going. Wonderful hearing you guys talk about portfolios. So, final thumbs up. See you next video.